Welcome back to another video. Today we're going over Bbby stock. Make sure to subscribe and leave a like to spread Bbby news and support the community. And I'm getting better at that. So, a lot of people were confused about the price action today because I drew this arrow, which makes sense. Our average watch time for yesterday's video was 3 minutes. And later on in that video, maybe 6, maybe even near the end of 7 minutes, I mentioned something that people didn't realize. So, I'm here to clarify what happened. We had financial news coming out about the roadmap for the company. And the news that they released wasn't the best news short term. Short term being the key word. Short term, this raises a lot of fear, a lot of uncertainty, and a lot of questions. So, I went over like 3 or 4 scenarios yesterday. So, we rejected off this line over here, and we have been trending up in this ascending triangle. I said 3 things. 1, the news wasn't anything good or bad, and we just continue to follow this trend line up to the top of this until we see a breakout. 2, the news is really good, and we break out of this tomorrow, fill this gap at 16, come back down, and then fill this gap up at 2250. Now, the reason this is drawn up is because this is exactly what I said. Come up to 16, test back down, come up to 2250, and then maybe we'll start squeezing after that. That's still on the table. However, now we have bad news. That was the last scenario. The last scenario was the news wasn't good. And the thing is, right, I was with the whole AMC play. We're going to be comparing the stock to AMC once again. And as soon as bad news comes out, hedge funds take advantage of this and spread articles that make it even worse for us. I said the news is really bad. Oh no, I said 4 scenarios. If the news is bad, maybe it would come down to this trend line or about $10.50. If the news is really bad, this is our opportunity to fill this gap down here. Anyone that's been watching the channel knows how much I love or hate gap fills. Why gap fills? How often do gap fills? Gaps fill 92.2% of the time. And I said with this stock, it's all about trying to predict what gap was going to fill first. I would prefer this gap filled first because when it is filled, it doesn't give the stock a reason to come back down. Every other stock, like ATA, when there was a gap filled at the start of the run up, a gap that needed filling, inevitably it came back down and filled the gap. Once this was filled, I'd be a much more confident and sustainable run just because there's no reason for it to come back down. Now, this gap always gives it a reason to come down. We gap down today. What does this mean? It means there's a 92.2% chance historically that we'll fill this gap. Nothing to worry about. Same with this gap, same with this gap. We have high chances of filling these gaps. This company is fundamentally as well improving. And honestly, eventually $9.53 will be fundamentally undervalued for the stock as well. Some might even say it is now. The only thing I don't like is it stretches out the timeline a little bit. We have earnings over here, which is very soon, about 4 trading weeks, and maybe this could be some good momentum because we did kill a little bit of momentum here. Still a lot of eyes on the stock. Let's go to AMC really quick. There's nothing really much more to talk about Bed Bath & Beyond apart from comparing it to AMC's pre-runner. We come to AMC. Sorry if you guys can hear the dogs barking. This squeeze, there wasn't really a community behind this squeeze. The community really started like in March when the community really started to grow. The reason I know this is because I brought in like late February and I was searching everywhere on the internet for AMC videos, everywhere. There was like no subscribers. There was like no one. There was like Trades was like the only one that was doing it. There was a few other people with like a few hundred subs making videos that are way bigger today. The reason this one wasn't as big of a play, like community-wise, is because everything was squeezing back in. But you can even see that it gapped here. It gapped up and it came back down and filled. But that's not what we're saying. What I'm saying, even here it gapped and it came back down and filled. But over here, this is an important time frame. Over here it was up, I don't know, like 250%. This at the time was 1450. Over here, everyone was saying, okay, so most of the community got it in about $8, which is about $6.50 now. And all the way at $14.50, which is here, Everyone thought it was going to squeeze. Everyone thought it was going to take off. And what happened? It sold off. It sold off hard. And it went down lower than the average person had brought shares in at $8. It went down to about $7. Everyone was freaking out. After we recovered, after the community continued to grow, like Bed Bath & Beyond, we inevitably came up and we tested 1450 again. And we came back down. Everyone was scared. Everyone thought it was going to be a repeat. The next day, like after it came back down to its lowest, the next day is the day we took off. So what does this mean? What am I trying to say? I'm trying to say that, let's go back to Bed Bath & Beyond really quick. I'm trying to say that, hold on, 4 hourly, wait for the chart to load. Oh no, I think my trading view is broken. Okay, so what am I trying to say? One, we could compare this to like this run-up. This could be like the first run-up in like January, when everything was squeezing, when the community wasn't as strong. Two, this is like the accumulational phase plus, I don't know, like emotional testing phase. This is the phase where the community grows stronger. This is the phase where more people buy shares. This is just a time to accumulate all those things. And then three, the third phase is we run up again. This looks very similar to AMC. Maybe not chart-wise, but setup-wise, community-wise, word-wise, everything. Very similar to AMC. And right now, I think we're in that period where it comes down from 1450, that recent high, comes back down, everyone's freaking out, before the next run-up. That's what I see happening. So for tomorrow, what do I see? Just in case anyone's interested in tomorrow. Tomorrow, I see it's coming down to $8.10, something like that. Some might argue that a gap filled here. I don't count this as a gap fill because all the other gaps are on the daily. All the other gaps are on the daily. This needs to fill on the daily, really. It's coming down to 8.20. This is a great time to buy. Great time to buy. I don't think it's going to come lower than this for a very long time. 8.20. Look, maybe briefly we might get a wick down at 8 or 7.50. A very brief wick that scares people, but no. I don't think we're actually going to hold below $8. Then, after that, after all the fear's gone, fill this gap. We'll fill this gap all the way at 11. Maybe make it back into this triangle. If not, I'll delete this. Fill this gap, and maybe that's the momentum we need to squeeze. If not, maybe some fundamental news will squeeze. If not, I'm sure people know about the gamma ramp on January, which is very exciting and even bigger than AMC's gamma ramp before a squeeze. The whole thing with AMC squeezing was its gamma ramp. The gamma ramp was literally like a double squeeze. This gamma ramp is huge. It's like 60% of the free float, I think. That's 60% free float short squeeze if they're all in the money. And then the short squeeze. That's literally 100% short squeeze because the short interest is like 40%. So, that's it for this video. Make sure to like and subscribe. I'll see you guys in the next one.